about the equity markets and spread trading, and also a little optionality with the spread trades as well. What do you know about spread trading so far? Have you done any spread or pairs trading, and like, what's your vibe on the general topic?
I will say this area of trading has probably been the least where I've been active. I guess you could say
Okay.
this is, yeah. So I barely put anything on. I know we've kind of talked about the knob spread a little bit, spreads like that. With Tom, we've talked about certain pairs trades, but I can probably count on one hand how many times I put on a spread or a pairs trade. So this is again going to be another kind of me just soaking in the information that you're spewing out right now.
Totally cool. Because like, so here's spread is one of those versatile words in trading because it means just so many different things. And I'll just quickly walk through it because you've almost definitely traded an options spread before,
Right.
like a call spread or put spread. And actually, why don't you just explain like what that type of spread is? Like, if
Yeah.
you go into the options market and you look at, say, just a call spread, what's going on there?
Yeah. So if I want to, let's say, sell a call spread, I want to get short on this specific underlying. I'm going to sell that call, but I'm also going to buy that call at the same time to kind of hedge. I guess you could say that's kind of how I see it in my head. I'm buying another one to hedge against the position that I'm putting on right now, and then we get that spread. Um,
Exactly
yeah,
right. And like, and that's not that specific definition when it's like, oh, I'm selling a call spread. If the market's at 100, I sold the 105 call and I bought the 110 call. And that's
yeah,
called defining your risk. Or like you said, it's like hedging a short option strategy, because you could have just sold the 105 call. If the market goes to 120, I'm out $15. But if I bought the 110 call, I'm only out $5. And so it is kind of a hedging strategy whereby you're doing two things that kind of counteract each other at once. Same thing in futures. And today we're talking about stock futures and just stocks in general, where the idea is going to be selling something and then also buying something at the same time to create kind of a hedge and a different trade, whereby I've hopefully mitigated some of the risk, as opposed to selling something and just being like, oh, well, I hope this thing goes down, or vice versa, buying
right.
something and being like, oh, I hope it goes higher. It kind of adds some permutation, some ways for you to be right.
100%. And then I would say another reason why kind of besides the kind of the safety net, the other hedging against the position, the lower capital it usually takes to
Yeah.
put on some of these spread positions too. So
Absolutely. So many different advantages of using spreads in options and futures and everywhere else. Let's focus on the futures piece a little bit here today and walk through kind of what my idea is generally when I'm putting on a spread trade in equity futures or interest rate futures or anything else. We're looking at the small stocks futures here, and stocks you can see are at all-time highs, up over 30% this year. But this is like that idea of like, oh, stocks are higher. Well, thanks. Like 9 out of 10 years, stocks move higher. And on any given day, there's a higher likelihood that stocks move higher than they do move lower. S&P 500 is above 4,000. It was only at 2,000 a few years ago. And so like, it's a matter of like, and maybe you could speak to this too, like what your kind of opinion is of this concept. Like, I don't like just being like, oh, that thing is expensive, I'm going to sell it and just like hope it goes down. It doesn't seem nuanced enough for me, right?
100%. That's one thing I still struggle with. Sometimes I'll see stuff that's way up or maybe even way down the opposite direction. And I just want a little more sometimes. And I know sometimes the options positions, I'll just throw some on, but nothing that gets me a little more convicted in the trade. Not emotional about it, but just have a little more conviction in it.
Absolutely. Because, yeah, the idea is, oh, something's up a lot. And using historical data, I would generate a probability that shows like it's likely to, in the next day, go higher again. So, like, why would I just sell it? But you use options and you use spreads to kind of get some probabilities in your favor, to look at that extreme and trade that extreme that has some opportunity to revert. Hopefully, but give yourself a little bit of nuance, a little bit of edge in your favor. And so what we do in the futures world oftentimes is we'll say, okay, this stock market is up 30% this year. This other stock market is only up like 10% this year. And these two markets are highly correlated. They're both made of stocks. We're looking at SM75, which is the small stock market. It has 75 stocks across 5 different sectors. And then you have STIX, which is the small technology stock futures. And that's 60 stocks that are just specific to tech. And while tech had a good 2020, in 2021, these small tech stocks have not been performing as well as the stock market at large. And so now you start to see your idea go from just like, oh, expensive things sell, to like, okay, there's an expensive thing, and then there's a thing that's very similar to it that's not as expensive. And maybe I can add, like I said, that nuance to this thing, given that red line, the small tech market. I mean, it's outperformed small stocks at several points in this year. You look at February, you look at as recently as September and October, where this market was streaming to new highs, while that white line, small stocks, was not performing as well. But right now, that market's nowhere. It's $5 off of its highs, while the small stocks market is at those highs. Is this starting to kind of fill out what we're thinking about doing here?
Yeah, a little bit. I'm still trying to tag along. So I have a question right now. So
go for it, dude.
Yeah, so we have the small stocks up in the small tech. Real quick, why are we choosing this pair right now?
So what you want to do when you're looking to spread off futures, is you want to get markets that are kind of in the same class, that they maybe have crossover, they have high correlations, but they're different enough that they kind of diverge and converge. Because if you were to say, look at the S&P 500 futures and the S&P 500 ETF, it's like, it's the same thing. There's going to be nothing for me to trade there, because they're going to move tick for tick on a microsecond basis. They're going to move together. Now, what we have here with these two markets, and what I like to do is, okay, like if I'm going out into futures with the idea of spread trading, I'm going to look either at equities, or I'm going to look at interest rates, or I'm going to look at currencies, or I'm going to look at commodities, and try to pair things up in terms of some of the greatest divergences here. So we're looking you look at, small stocks, small tech, NASDAQ, Russell, Dow, all these different markets, and just be like, okay, what is showing a pretty decent divergence? And right now it is the small tech versus small stocks in general.
Okay. And is there a specific correlation that you'll look for better opportunity?
Absolutely. The sweet spot that we always speak to in terms of correlation when you are spread trading markets is going to be between like 0.5 and 0.9. Because if you get above 0.9, those things are likely moving like right on top of each other. But that sweet spot there tells me, okay, these things tend to move in the same direction, but they're going to give or take. Like I said, like at the start of the year, Errol, we were selling technology stocks and buying the small stocks market here. And that trade, as you can see, came in. And now it's later in the year and the other market is outperforming this one, but they're both up on the year, right? Like they both are trending in the same direction. But since their correlation is only like positive 0.6 or 0.7 or 0.8, they diverge, and they have, periods of one moving a lot higher and the other one kind of sitting around unchanged or maybe even edging lower.
Okay. And now kind of my question is there more opportunity when, let's say when we go around May 2021, we can see small tech had a pretty large down move. Is there more opportunity when they are further apart from each other?
So that's the way the thinking goes with spread trading. And so a little bit of background, and this might bore the hell out of you, so let me know if you're bored.
Let's go.
But when I started trading at the Board of Trade, it was all interest rate markets. Like on my board, and you're probably about to be like, I didn't even know that there were this many interest rate markets. I had like 50 interest rate markets on the board, and I'm constantly just pricing, like all these different little spreads. And the greatest interest tends to occur in the thing that's the widest, that's really separated. But like I say, you have to make sure that you're grounded in a good correlation in markets that actually do tend to move together, because otherwise it could be like, oh, like natural gas is down huge and the stock market's at highs. Like I'm buying natural gas and selling stocks, and it's like those things don't move together. Like
Yeah.
those are two
Yeah.
completely independent trades. You want markets here that are at least semi-dependent on each other. And what's interesting is the small stocks and small tech, 75 and 60 stocks respectively. There's crossover of about 5 to 10. Like they hold 5 to 10 of the same exact stocks. So, and they're also equities in general. So you have a pretty good correlation there. But yeah, to your point, like you don't want something, or at least in my head, I'm more of like a mean reversion trader where it's like, if the difference between the two is very small, it's like, all right, that's not interesting to me, but I'm
Yeah.
looking for a big extreme between the two. And while you can kind of see it here, Errol, you can actually plot the difference between these things and look at the spread value. And so now we've combined those two lines here into one market by just subtracting one from the other. And you can see here that this is a pretty decent extreme SM75 over sticks, whereas they started the year at a difference of 0, and now they're at a difference of almost $1,800 here. And so my whole thing is always like, you look for price extremes in underlying markets. This thing is at a 10-year low, or this thing is at, a 5-year high. And that starts to create maybe a potential opportunity. With spreads, it's even more intriguing when you have these extremes, because like they have a tight relationship. And they should be kind of moving together, and they should be in line. And so when they get really out of whack, that's really interesting to me. Does that make sense?
Yeah, no, now I'm following. That helps a lot. Do you like to trade this specific pairs right here?
This is one of my favorites, especially starting out, just because what you'll get. So it's interesting you brought up to start the show that spread trading in options can actually help diminish buying power requirement. When you sell a call, maybe it's $1,000, but you buy a call that's $2 or $3 away, and it's only going to cost you like $200.
Right.
And that's nice. In pairs trading or spread trading with futures, you have to still pay for both of the markets. And so if instead of looking at this, I'm looking at selling, the S&P 500 and buying NASDAQ, the E-mini futures, I mean, that's going to be like a $30,000 trade. The micro futures, that's going to be like a $3,000 or $4,000 trade. This pairs trade here is about $1,000, and it doesn't move as much as those. So that's why I like looking at these, because, the small exchange helping to kind of get you more comfortable in futures in general, and especially here in spread trading, just because it's smaller, it's kind of easier to digest.
Yeah, I would agree.
And so, yeah, this is also one in the equity. Like this stuff changes all the time.
What do you mean?
Like so in the 90s and 2000s, the big sector of the equity market was energy.
Okay.
And so I'm sure a lot of people back then were playing energy against either other sectors or the stock market at large. Now, here in 2021, it's tech, right? Like that's the big stock sector out there. And so that is, to kind of your other point, that is one of my go-tos, is like, what is the stock market at large doing? And then is technology under or outperforming that stock market at large, given that it is the most prominent sector? And then I look to kind of trade them off of each other.
Okay, I see.
But you can do it theoretically with like any market.
Okay, so do you kind of just find kind of what you like, what you're kind of comfortable with some of these spread trades, or what's kind of going on there?
So essentially looking at your watch list of equity futures, or like I say, other asset classes, interest rates and everything else. And what I'll do, Errol, is either if you're looking to day trade spreads, I'll just look at the net changes between them and just be like, oh, this one's up 1% and this one's unchanged. I'm going to sell that one that's up 1% and buy the one that's unchanged, and look for some day trade spread reversion here. But you could also just like take the names that are common in your daily watch list. Like I say, like what are some of the stocks that you look at on a daily basis?
Maybe on a daily basis, it could really be anything. Maybe AMD, it could be Nvidia, it could be Twitter, Facebook, and whatever it is.
And those are actually fantastic examples for what I'm about to do here. AMD and Nvidia, in the same sector. Like those are single stocks, which pose a little bit more risk in spread trading because one of them could have earnings or, a specific news item about the NVIDIA CEO or whatever, and they could go in completely different directions. But since they're in the same sector, you could look at pairs trading those two. And like you spoke to Facebook and Twitter, both social media companies, you could look to pairs trading those as well. When I came up, the big example was always like Coca-Cola versus Pepsi. And it's like, oh, that makes sense. Like if Coca-Cola is up 10% this year and Pepsi is down a couple percentage points, like there could be some reversion there. Why should these soda makers be, diverging so much? Same with like airline stocks. That's always a popular one too.
Okay. So like AAL, UAL, those kind of things.
Exactly right.
Now, what about when it comes down to like gold? Let's say gold, we have silver. Is that too like what's up with it? What's up with that? Yeah.
There you see, this is why I love Errol is such a fantastic co-host here because that's exactly the idea, man, is like applying this to all these, as long as there's a decent correlation, like where you get into trouble with that example, gold and silver is a classic pairs. Like that's probably in the top, that's on the Mount Rushmore of pairs trades, probably.
Top three.
But like where you get into trouble is like, oh, like aluminum is metal too. And so is gold. And it's like aluminum though is an industrial metal and gold is a precious metal. And it's like the correlation's not really there. That would kind of be like NVIDIA and AMD are like gold and silver, whereas like NVIDIA and Coca-Cola would be like gold and aluminum, where it's like, oh, they're both stocks. And it's like, yeah, but they don't have the same drivers,
Nice analogy there. I'll give you that one, Frank. That one was good. That one was good.
Did you hear that?
Like I understood that one immediately.
Well, what happens the other other times?
The other times, new information. I'm just soaking it in. But that one was a good analogy from a teaching perspective to someone consuming the information. That was a good one. You
just dropped that's like I did this actually, and I have to be careful because the person who I did this to is in the office today. I accidentally someone was like, oh, you should like maybe think about doing this in terms of like the content and whatever. And I was like, oh, that's actually a good idea. And that I like once I said it, I was like, oh, like, because when you drop that actually on them, they're like, oh, so all of my other ideas suck. Okay.
Exactly. Actually, Frankie, you're pretty good at this.
For the first time, we've been doing this show for months. And the first time I actually got a point across to Errol. Now, I'm going to confuse it now. I'm going to totally mess it up because this is another thing that always intrigues me, especially when you're speaking to equity indexes that have a bunch of stocks. I also do like to dive into them and look at like, okay, if tech is underperforming and I want to get a pairs trade going with tech versus the stock market at large, that's one thing. But let me look under the hood and what's really underperforming in technology. And you can look at those components in this stock IQ. Have you traded this one before?
I've come across it, but I can't say I have traded it for sure.
As you can see, it's had a rough go here in 2021. And another thing that I do also like to look at is offsetting some of the exposure with options on the single names. And so in this example here today, to get on the other side of this pairs trade, what I think is a decent opportunity here in mid-November, you would simply sell this spread, which would be selling this SM75 and buying this sticks. Relatively simple. Are you there with me?
Yeah, I'm here.
And then the next thing that you could, if you wanted to add some options on top of it, is look at this kind of beat up, low price stock, sell that SM75, buy the sticks, and then also maybe sell, a put option around it here in IQ. That's adding the options into this futures pairs trade. And I know I'm going a little far here. If you've lost me, just tune out and just appreciate that. Hopefully you got some knowledge on spread trading here today, but adding short options in this lowest of the low stocks can kind of further the value in a pairs trade like this.
We might have to talk about this more next week too. This got me pretty interested. This is something new. I have not gotten into this one at all. What would you even call this?
I mean, at this point, my friend, we're like inventing stuff. I don't even, there's not a name for it at that point. So
Okay.
so we'll save that for next week or
Okay.
further down the line. Let's leave it off with the basic spread here, and very easy to do in Tastyworks. You can see they've got the pairs trader. All I'm doing is buying that thing that's underperforming, selling the thing that's outperforming 1-to-1, because these markets are very similarly priced. They have the same multiplier. It's going to cost you about $1,300 in buying power. And this is one that I would look at here. You're buying negative 1,700, and I would flip it if it gets back to negative 16 or negative 1,500. I think this is a trade you could take $100 or $200 out of, and one that I like here in mid-November. What say you?
Yeah.
Awesome. Very cool stuff, my friend. Okay. So I took it a little too far there. We got to a good place, and then I got greedy, I think.
No, that was pretty solid. I'm definitely following with just the spread in general, just because I understood the knob spread a little bit, so yeah, I'm definitely gonna have more questions about, selling that option against it next time. So looking forward to it.
For sure. Yeah, it's kind of like, I guess I'll put this this in your brain to think about. It's kind of like a covered position, right?
Okay.
It's like when you buy something and you sell a call against it, or you sell something and you sell a put against it. It's kind of covering the position with the weakest market there. And also, just another thought to kind of leave both you, Errol, and our audience with here is, like, spread trading is super cool because you can really, like I say, if there's a decent correlation, feel free to apply it to almost anything. It's a really cool concept that our brains definitely grasp. Like when you go to the grocery store and stuff, everybody compares, like, this cereal is $5, this cereal's $4. What's up with that? Like, I want to buy the cheap one and sell the expensive one. Start to kind of think about that in these different markets. Make sure, of course, that they're both cereal. Like, I'm not selling cereal and buying steaks. Like, it's like, okay, there's no correlation.
Groceries, but
exactly. Yeah, like they're both stocks,
yeah.
but they do completely different things. So yeah, so I would kind of implore you to look at this spread that we looked at here today. A really nice spot to start in spread trading, but also, yeah, like Coca-Cola versus Pepsi, the airlines, semiconductors, cryptocurrencies, another place that is definitely ripe with pairs trading opportunity. And it'll be a good time. It opens up, like, say you have, 12, 15 markets on your board on a daily basis. You just opened yourself up to hundreds of permutations of different trades. It's a fun thing.
Agreed.
All right, my friend, that is it for Small Stakes. Always a joy to have you on here, Errol. Thanks so much for getting on and chopping it up all the way from Colorado. Hopefully you get out there. Are you going to, but do you do the skateboarding in Colorado? Or is that a Florida thing?
When I did do skateboarding, I was in Colorado, but I don't skate anymore. But I'm always down to hop on the board and see what happens.
Are you going to go outside and do anything?
Eventually, yeah. Once I'm off the computer and stuff, maybe I'll figure something out. So
you cut a very fit figure, and so, like, I feel like you're doing something.
Yeah. Right? I like to work out. Maybe I'll hit the gym later. Maybe hit chest day. I don't know. So we'll see.
All right. Well, you heard it here. Errol might hit the gym later, everybody. If you were wondering, I'm gonna hit the platform with Pete Momet, Splash into Futures, coming up next. We're gonna get some futures trades on. Thanks for watching, everybody. Peace.